Hello everyone, welcome back to my YouTube channel. Today we are discussing the latest developments surrounding the Vietnamese Dong, the USD VND exchange rate, and growing speculation about whether Vietnam's currency could experience stronger valuation trends in 2026 and beyond. Over the past several months, global investors, currency watchers, and international traders have been paying close attention to Vietnam's economic performance as the country continues to strengthen its role as one of Asia's fastest growing manufacturing and export-driven economies. At the same time, the Vietnamese Dong has remained under pressure against the US dollar due to ongoing global uncertainty, elevated interest rates in the United States, geopolitical tensions, and strong demand for dollar-based assets around the world. According to market analysts, the current pressure on the Vietnamese Dong is being driven by several major factors at the same time. Globally, the US dollar index, also known as the DXY, has remained near the important 99-point level as investors continue monitoring signals from the US Federal Reserve. Many financial institutions now believe the Fed could keep interest rates higher for longer than markets previously expected. This has supported demand for the US dollar across international markets and created additional challenges for emerging market currencies, including the Vietnamese Dong currency experts explain that when US interest rates remain elevated, investors often move capital into dollar-denominated assets because they can receive higher returns with lower perceived risk. That creates upward pressure on the dollar while weakening many Asian and emerging market currencies. Vietnam, despite maintaining strong economic fundamentals, has not been immune to these global trends. The Vietnamese Dong has therefore experienced periods of depreciation pressure as businesses, importers, and financial institutions increase demand for US dollars. At the same time, geopolitical uncertainty across several regions of the world has also contributed to global demand for safe haven currencies. Investors remain cautious regarding trade tensions, conflicts in major economic regions, energy market volatility, and uncertainty surrounding global growth projections. As a result, capital flows have continued favoring US dollar assets, particularly US Treasury securities and other dollar-linked investments. Analysts believe this environment has limited the ability of many Asian currencies to strengthen significantly in the short term. Domestically, Vietnam's banking system has also been experiencing liquidity pressures. Interbank interest rates have remained elevated at approximately 6 to 7% annually, indicating that liquidity conditions within the financial sector are still relatively tight. Financial experts say this is an important signal because elevated interbank rates often reflect higher demand for short-term funding among banks. This environment can indirectly support demand for foreign currencies, especially the US dollar, as importers and corporations continue managing international trade obligations. Import activity has remained relatively strong in Vietnam due to the country's expanding manufacturing base. Vietnam continues importing machinery, technology equipment, raw materials, electronics components, and industrial supplies needed to support export production. Since many of these transactions are settled in US dollars, strong import activity naturally increases demand for foreign currency. Analysts note that this has contributed to exchange rate pressure in recent months. However, despite the ongoing pressure, many economists believe the current situation is far more stable than the volatility experienced during previous periods of market turbulence, especially during late 2024, when global currency markets experienced sharp fluctuations. Analysts now suggest that Vietnam's macroeconomic position is stronger, foreign reserves remain relatively stable, and the government has more policy flexibility to manage short-term exchange rate volatility. A recent report from MBS Securities projected that the USD VND exchange rate could rise by approximately 5 to 3% during 2026. While this still represents depreciation pressure on the Vietnamese Dong, Analysts emphasized that the expected movement is significantly lower than the dramatic fluctuations seen in earlier years. This has reassured many investors who feared a more severe currency adjustment. According to MBS analysts, one of the most important supporting factors for the Vietnamese dong over the medium term could be the gradual weakening trend of the US dollar globally. Economists explain that if the Federal Reserve eventually shifts toward monetary easing and begins reducing interest rates, the dollar could lose some of its current strength. This would create more favorable conditions for emerging market currencies, including the Vietnamese dong. Another key factor supporting the Vietnamese currency is Vietnam's continued economic expansion. Vietnam has emerged as one of Southeast Asia's most important manufacturing and export hubs. Major global companies continue increasing investments in Vietnam as supply chains diversify away from over-reliance on single-country manufacturing centers. Foreign direct investment into Vietnam has remained strong, particularly in sectors such as electronics, semiconductors, renewable energy, logistics, textiles, and consumer manufacturing. Analysts believe continued foreign direct investment inflows are extremely important for Vietnam's currency stability because these investments bring additional foreign currency into the country. When multinational corporations invest billions of dollars into factories, infrastructure, and industrial projects, the supply of foreign currency entering Vietnam increases. This can help offset pressure from imports and support the stability of the Vietnamese dong. Over time, VP Bank Securities also recently stated that the exchange rate may fluctuate by only around 1% this year, reflecting a relatively controlled outlook compared to earlier fears of larger depreciation. According to the firm, several positive economic trends continue supporting Vietnam's overall currency outlook. These include healthy export growth, resilient foreign investment inflows, strong tourism recovery, and expectations that the Federal Reserve could gradually adopt more accommodative monetary policies later in the year. Vietnam's export sector remains one of the strongest pillars supporting the economy. The country continues benefiting from robust exports of electronics, smartphones, computer components, agricultural products, seafood, textiles, footwear, and industrial goods. Trade agreements with multiple international partners have further strengthened Vietnam's competitiveness in global markets. Analysts say continued export growth is especially important because export revenues generate a steady inflow of foreign currency, helping stabilize the exchange rate. Tourism recovery has also become another positive factor, supporting Vietnam's economic outlook. International visitor numbers have continued rising as travel demand rebounds across Asia. Increased tourism revenues bring additional foreign currency into the economy and improve overall balance of payments conditions. Many economists believe the tourism sector could play a larger role in supporting the Vietnamese dong during the coming years if visitor growth continues accelerating. Despite these positive factors, analysts caution that risks still remain. One of the largest concerns involves the possibility that US inflation could remain persistently high. If inflation in the United States fails to decline as expected, the Federal Reserve may delay planned interest rate cuts or even maintain tighter monetary policies for longer than markets currently anticipate. In that scenario, the US dollar could strengthen again globally, placing renewed pressure on the Vietnamese dong and other emerging market currencies. Another important risk factor involves global commodity markets, especially gold prices. Analysts warn that rising demand for gold imports within Vietnam could place additional strain on foreign currency supply conditions. Vietnam has historically experienced periods of elevated gold demand during times of economic uncertainty or exchange rate volatility. Increased gold imports often require additional US dollar payments, which can contribute to currency pressure. At the same time, global oil prices remain another important variable affecting Vietnam's currency outlook. Although Vietnam is an energy producer, the country still imports refined fuel products and remains exposed to international energy price fluctuations. If oil prices rise sharply due to geopolitical tensions or supply disruptions, Vietnam's import bill could increase significantly, placing additional pressure on the trade balance and the exchange rate. Financial experts say that one of the most important strengths of Vietnam's current economic strategy is the flexibility shown by the State Bank of Vietnam. Analysts expect the central bank to continue prioritizing market stability through a combination of exchange rate management tools, interest rate adjustments, and open market operations, designed to limit excessive short-term volatility. Rather than allowing uncontrolled market swings, authorities are expected to maintain a carefully managed approach that balances growth objectives with financial stability. Currency traders also note that Vietnam has gained increasing credibility among international investors over the past decade. The country's relatively stable political environment, expanding industrial base, improving infrastructure, and export competitiveness have made Vietnam one of the most attractive emerging markets in Asia. This reputation has helped strengthen investor confidence, even during periods of global uncertainty. Many market observers are now asking whether Vietnam could eventually allow the dong to strengthen more aggressively in the future. While some online speculation has used the word revaluation, economists clarify that Vietnam's currency system operates differently from fixed-rate systems associated with sudden overnight revaluations. Instead, the Vietnamese dong typically moves gradually based on economic fundamentals, monetary policy, trade conditions, and international capital flows. Most professional analysts therefore do not expect any dramatic overnight revaluation scenario. Instead, they believe the more realistic outlook involves gradual long-term stabilization, supported by economic growth, stronger foreign investment, expanding exports, and improving financial market confidence. Over time, these structural strengths could support a healthier and more resilient Vietnamese currency environment. Vietnam's rapid rise as a manufacturing powerhouse remains one of the biggest reasons global investors continue monitoring the country closely. Major technology companies have expanded production facilities in Vietnam as businesses seek diversified supply chains and lower manufacturing costs. This transformation has significantly boosted Vietnam's role within global trade networks. Analysts say that if Vietnam continues moving higher in the global value chain, the country could attract even larger inflows of foreign investment during the next decade. The Truska development also remains critical to Vietnam's future currency outlook. The government continues investing heavily in highways, ports, airports, rail systems, industrial zones, and digital infrastructure. Improved logistics and transportation networks increase economic productivity and enhance Vietnam's attractiveness as an investment destination. Stronger infrastructure can help accelerate long-term economic growth, indirectly supporting currency stability. The technology sector is another area generating optimism among investors. Vietnam has become increasingly important in electronics assembly, semiconductor packaging, software development, and digital services. Analysts believe the country's young workforce, competitive labor costs, and growing technical expertise position Vietnam well for future expansion in high-value industries. A stronger technology sector could help Vietnam increase export revenues and improve long-term economic resilience. Meanwhile, banking sector reforms remain another important focus area. Vietnamese authorities have continued efforts to strengthen financial system transparency, improve regulatory standards, and reduce risks within the banking industry. Stable financial institutions are essential for maintaining investor confidence and supporting long-term currency stability. Economists say progress in these reforms has improved Vietnam's overall macroeconomic credibility. Inflation management also remains relatively important in determining the future direction of the Vietnamese Dong. If domestic inflation remains controlled while economic growth stays strong, the central bank will have greater flexibility to manage monetary policy effectively. Stable inflation helps preserve purchasing power and supports investor confidence in the local currency. Analysts additionally point to demographic advantages supporting Vietnam's long-term outlook. The country benefits from a large, relatively young, and increasingly educated workforce. Rising urbanization, growing middle-class consumption, and expanding domestic demand are expected to contribute to sustainable economic growth for many years. Strong internal economic momentum can help reduce vulnerability to external shocks and support currency resilience. Global trade realignment trends may also continue benefiting Vietnam. Many multinational companies have accelerated diversification strategies following disruptions experienced in recent years. Vietnam has positioned itself as one of the major beneficiaries of this shift. Increased manufacturing relocation into Vietnam could continue boosting exports, industrial production, and foreign investment inflows well into the future. However, economists caution that global conditions remain highly unpredictable. International financial markets continue reacting rapidly to geopolitical developments, inflation data, central bank decisions, and changes in investor sentiment. Even strong economies can experience temporary currency pressure during periods of global volatility. Analysts therefore emphasize that exchange rate fluctuations should be viewed within the broader context of international market conditions, rather than interpreted as signs of economic weakness alone. Some financial experts also believe that Vietnam's cautious exchange rate management approach could actually benefit the economy in the long run. By avoiding excessive currency volatility, authorities help businesses maintain stability in trade planning, investment decisions, and financial operations. Predictable exchange rate conditions are especially important for exporters, importers, manufacturers, and foreign investors operating in Vietnam. At the same time, Vietnam's growing participation in international trade agreements continues supporting economic expansion. Agreements involving Asian, European, and global partners have improved market access for Vietnamese products, while encouraging foreign companies to establish production facilities within the country. Analysts say these trade relationships provide important long-term support for export revenues and foreign currency inflows. Looking ahead toward the second half of 2026 and beyond, investors will continue closely monitoring signals from the Federal Reserve, global inflation trends, commodity markets, and capital flows into emerging economies. Any major changes in U.S. monetary policy could significantly influence the direction of the dollar, and therefore impact the Vietnamese Dong. If the Federal Reserve eventually moves toward interest rate reductions while Vietnam maintains strong economic growth and stable investment inflows, analysts believe pressure on the Vietnamese Dong could ease considerably. In that environment, the currency may stabilize more effectively against the US dollar and potentially strengthen gradually over the medium term. Still, economists emphasize that currency markets are influenced by many interconnected factors. No single event alone determines the direction of exchange rates. Instead, the value of the Vietnamese Dong will continue reflecting the balance between domestic economic fundamentals, global financial conditions, investor confidence, trade performance, and central bank policy decisions. For now, the overall message from analysts appears relatively balanced. While short-term exchange rate pressure remains present due to global dollar strength and tight liquidity conditions, Vietnam's broader economic fundamentals continue providing important support. Continued export growth, rising foreign investment, tourism recovery, infrastructure development, and proactive policy management all contribute to a more stable, long-term outlook for the Vietnamese economy and its currency. Many international investors therefore continue viewing Vietnam as one of Asia's most promising growth stories. The country's ability to maintain strong economic momentum, despite global uncertainty, has attracted increasing attention from financial markets around the world. Although challenges remain, analysts believe Vietnam is better positioned today than during previous periods of currency volatility. As discussions surrounding the Vietnamese Dong continue across financial media and online investment communities, experts encourage investors to focus on realistic economic analysis rather than speculation about dramatic overnight currency changes. Sustainable long-term currency strength typically develops gradually through economic expansion, investment growth, stable monetary policy, and improved productivity. In Vietnam's case, many of these supporting conditions continue moving in a positive direction. So while the Vietnamese Dong may still experience periods of fluctuation against the US dollar in the months ahead, analysts generally agree that the broader outlook remains considerably more stable than many feared during earlier episodes of global market volatility. Investors, businesses, and currency watchers will now continue monitoring how global interest rate trends, trade performance, and central bank policies shape the next phase of Vietnam's financial and economic journey. That is the latest update on the Vietnamese Dong exchange rate, market outlook, and economic analysis for 2026. Thank you everyone for watching, and stay tuned for more updates on global currencies, international markets, economic developments, and the latest financial news from around the world.